Mortgage made super simple. I want to just break down mortgage lending for you just in a nutshell and some things you can do really easily. So lending is super, super simple. It all works on one premise and one premise alone. That is that the risk equals your rate. The more risky you are, the higher the rates you pay. The less risky you are, the lower the rates you pay. This little slide I got right here, I call it the cash to complex continuum. Everybody falls someplace on here. If you're buying a house with cash, you're very little risk. If you need to finance, let's say 100%, that becomes more risky. Higher credit changes your risk. So everything works on a continuum of the risk equals the rate. And as I go into there, a lot of things, there's primarily three things that we really look at. You want to look at your income to make sure that you make enough money to pay the bills. That's kind of a pass fail. Either you do or do not. You're not going to get a significantly better rate because you make a lot more money. Either you make enough or you don't. So that's kind of a pass fail. When it comes to money for down payment, those kind of things, for the most part, if you have enough money for the down payment and the reserves, it becomes a pass fail. Having a lot of money doesn't get you a significantly better interest rate, but there is one area that will fluctuate a lot, and that is your credit score. So you may be able to get a mortgage with a 500 credit score, all the way up to an 800 credit score. But the difference in interest rate between those two, there's like a Mack truck that you can drive through them. So the one thing that you can do and control as far as what your interest rate is going to be, and I don't care if you're looking at purchasing a home, refinancing, whatever it is, your credit score is the one thing that will indicate what happens with your rate that you receive more so than anything else. So most things are pass fail. Credit is the one thing that you have some control over. Now, a lot of people say, well, I don't understand my credit. I don't know exactly what it is. It said this on the Discover bill. I want to just walk you through someplace. So if you are thinking about doing anything today, 6 months, 12 months down the road, I want to walk you through one thing that you can do today. You can go in and look at that can help set you up. So we've got this thing called our FinToolbox, and I'll include a link someplace here for you to register for here. But go in, you can look at your credit. It's going to pull one credit bureau. It's a soft pull. It's not going to impact your credit. You're not going to start receiving a bunch of like cold calls. So what you want to do, right, once you pull your credit, you can go in here, and this is a sample client here, Jimmy. But Jimmy right now has got a 695 credit score. That's kind of in the fair range. If you can get over 700, you'll get better pricing. Over 720, you get better pricing. And for the most part, if your credit score is over 740, you can get better pricing yet. And then on the low end, you kind of need a 580 to be in the game, but there's a whole spectrum, different programs, different things. So here's some things that are really cool inside of here. One, you can go through and see your complete credit report. You can see all of your debts. You can even share it with, your lender, other people, but you see every debt, payment history, everything that's out there. You get your full report. It's not just the score. So you can get a lot of additional stuff. There's a little credit compass where you could go in and set a score where you're trying to get to. Maybe you want to refinance in 6 months. You think rates are going to get better, and if you can get your score over 720, you'll get a better thing. Kind of walks you through the steps there. This is what's really cool, though. If I go back here and I go to this credit simulator, I can go in and look and say, I'm going to go in. I can open accounts, close accounts. I can do a bunch of different things. But let's say I want to change the balances. So I'm going to go in here and I'm going to say, let's say I'm going to decrease the amount I owe by $15,000. And let's see what that does, right? Jimmy here's got a 695, and I'm just going to go in and I'm going to simulate the score with 15 grand. What would that do? Takes me up to a 708. So 708 puts me in the next bucket. What if I paid off all the credit cards? That'd take me to a 775. So there's a lot of nuance between where Jimmy sits today and where he might be. But just understand this. The higher the credit score you have, the better the interest rates you will get. And it's the one thing that you can control for the most part, right? Income, pass, fail. Amount of assets, pass, fail. Property, either it's good enough to lend on or it's not. So pass, fail. So a lot of those things are pass, fail, but credit is the one area where you right now today can begin making changes that will impact you positively 6 months down the road, 12 months down the road. If the Federal Reserve does come in and start cutting interest rates, doing those kind of things, when you get there, don't be disappointed that your credit score isn't what you thought it was going to be, because you have an opportunity to do it today. So control the things that you can control. Risk equals rate. All lending runs on that premise. So go in there, check it out. I'll include a link here. Totally free to you. It doesn't cost anything. Not going to get blown up with sales calls. Check out your credit. Understand where it is. Run the different what-if scenarios to see what you can do. And in addition to that, if you do sign up, we'll notify you once a month. We'll just let you know kind of what your credit score looks like. And we'll also email you weekly if your score goes up or down. So we're refreshing this on your behalf every single week. Check it out right here, someplace. Credit, it's important. It's the one thing you can control more so than anything else that dictates what you pay with regards to interest rates. Good luck.